that better? Everybody hear me now?
Yes, hello, welcome.
Great. Yeah, good morning. Sorry I'm a little late. I had some new clients that were talking tax law as well, and they went a little over, but um, that's why I'm here. So we can handle this however you like.
Okay, great.
Yep.
Well, I'll introduce you, Larry. So Larry is your CPA partner, correct, at Brown Smith
Correct.
and Settle, and he is here to share with us some information today on getting ready for our taxes. And I'll let you, Larry, if you want to share, and then we can open it up for questions if that's all right with you.
Yeah, that sounds great. And I think where I'd like to start is kind of at the back this year, which is kind of weird. But with all the things that are going on pandemic related, the new government programs, PPP1, PPP2, other acronyms like ERC, FFCRA. So there's all kinds of things out there that are beneficial. New stimulus payments possibly coming here in March, already been two. So, and couple that with the fact that tax law has not changed significantly year over year. So there are not a whole lot of new overarching tax rule changes. More of it has to relate to the pandemic side. So I want to start in the back, if you will, and talk about some things that people should be doing almost instantaneously. The tax season actually opens this Friday the 12th of February. So you can do your return, you can get ready, you could submit it to a vendor or electronically, but it won't go anywhere until Friday when the IRS opens up their site. So let's start there if we can. So, and anybody has questions, jump in whenever you feel like. So taxes this year can end up doing what we call double duty. And by that I mean, since the IRS has moved back the filing date, it's giving you a few more days to get everything together. It's critical because a lot of the stimulus money that you're going to get, the economic income payments, EIP, there's already been two, $1,200 per individual or $2,400 per married filing joint back in May or June of 2020. There was another one for $600 in January, just recently, and then there is a lot in the news that there could be another one coming out maybe by the middle of March and in the vicinity of $1,400. That looks like it's carrying a lot of weight and very well might happen, and the potential for you to get that $1,400 is going to be predicated on what's happened in your 19 and your 20 returns. So this year, and there's always a good reason to file your returns as quickly as possible. You have refunds, you get the money back faster. This year, not only does that apply, but the qualification for this upcoming potential stimulus check is going to be predicated on that amount as well. The benefit is also expanded to people who may not have gotten the full benefit that they were entitled to in the summer of 2020 or in January. And the people that could apply, there's about 10 million people that the IRS contemplates that did not receive some or all of their stimulus money that they'd be eligible for. And there's multiple reasons for that. You could have clerical errors, you could have garnishments, you could have child support issues, you could have marital dissolution cases in the middle of the year. The ones that we're seeing already are the people that have had additional dependents in 2020. So anybody with babies coming on board, your tax situation has clearly changed from 2019 to 2020. The other area where we haven't seen it yet, but I'm contemplating it, is the ones that had the college kids that just dropped off their parents' return. So they were on their parents' return in 2019. Parents may or may not have gotten a whole lot of tax benefit from them. 2020, they're off on their own. The college kid didn't get any stimulus money in the summer or in January, and now they are eligible. So where do they get this money from? It's going to come from their tax return. Again, file it early, utilize it's called the recovery rebate credit. So you won't see it as economic income payment or EIP. It's going to be recovery rebate. So get those returns in early. That'll potentially free up some money that you were missing in the summer and in January, and then it's going to set you up perfectly for anything that might be coming to fruition here in March or sooner, depending on if and when they get to that. The other thing connected to that is if, and we do have some clients that do not like, they still want to get the paper check. That's going to present a problem for these stimulus payments. You really want to get signed up for direct deposit. So file your return early, get set up for direct deposit if you're not, utilize the recovery rebate credit, and then go from there. One way to check that, I get a lot of calls from people wanting to know where their stimulus money is. That's one that I'm trying to avoid because, I mean, that's a deep, dark hole, if you will, for many, many people. There is the IRS website has a tool called Where's My Refund, which people can check on their own. You need obviously your name, social security number, date of birth, and the refund dollar amount in whole dollars that you were expecting. You pull that up, you should be able to see how and what the status is of your refund for that specific period. The normal time frame when you do your return this time of year, the fastest you could get your money would be in a week, and the slowest, if the return doesn't have any issues, is going to be 3 weeks. We see a turnaround time here in our office over the last couple of years of somewhere between 10 and 14 days, and you get your money. So get your returns in there, use direct deposit, follow your refund on Where's My Refund tool at the IRS website, and then you're going to be off and running. The IRS should have sent every person that received stimulus money 2 different letters is really what it amounts to. I think the notice is 1444, and then there's 1444B, I believe there is. Anyway, that notice tells the dollar amount of the money that you got in the form of the stimulus. You do not need that letter to actually file your return. So I'm already getting those calls as well. Do I have to wait on the letter? I can't find my letter. I lost it. I threw it away. Doesn't matter. If you know what your money is that you got in the form of stimulus payments, we just need the dollar amount. You do not have to wait on that letter to file your return. Okay? Let's see here.
Can I ask you a question real quick?
Sure, shoot.
Yeah, sure. So is it the amount of refund dependent on getting your returns in early or just the stimulus?
Say that again?
Is it the amount of refund dependent on getting your returns in early, or is it just the stimulus that we want to get those returns sent in early?
No, it's the stimulus. Yeah, that's a good question. So it is actually get the returns in early. If you let me put it in an example form. So if we file that return here in the next week or two, then this next stimulus package, based upon what we're hearing, I mean, we don't know what the rules are yet or if it's even coming, but if it does come and it comes in the fashion that we expect it to come, then your return's already in there and the IRS knows how to find your electronic deposit account instantly. So the money can come to you that much quicker. But it's not dependent on, your refund's not dependent upon that. Good question. Let's see here. So going back to where the IRS generated your stimulus amounts last summer and in January, they're basing that off of your 2019 return. So if your fact pattern, your income, dependents, all those things that may have changed between 19 and 20, you really want to get that return in there and get that clarified because the IRS is still basing all of their stimulus decisions, this March 14th potential decision, on what they have in the hopper. For that would be your 2019 return. And then if they didn't have your 2019 return, they would look back to 2018. If they don't have a return for either year, they didn't give you anything. So even people who would normally not have a need to file a return and they have, for some reason, have not gotten any money, they would actually file a 2020 return, wouldn't pay any tax, and that would free up this recovery rebate credit for them, and they could capture some of the money that they were missing from prior times. So we thought we were talking about tax law, but as you can see, most of it is morphed over into economic impact payments, stimulus, and the whole 9 yards. I will tell you that the recovery rebate credit worksheet is not easy. We're obviously using software to handle ours. If somebody's going to try and do that by hand, that's probably, I wish them luck. It's not an easy computation. So you got to have the facts, and then you got to run through the worksheet. And then again, a reminder, it is, by the way, the first notice is notice 1444. That's for the first stimulus round. And there should have been another letter, 1444B, for the one that just came out in January. But again, don't hold your return up just because you don't have that letter. Not necessary. I get this question occasionally, am I going to pay tax on the stimulus money? That's a no. You do not pay tax on the stimulus money. If they gave you more, after you go through this recovery rebate exercise and they gave you more than you were entitled to, you keep it. If they didn't give you enough, they'll give you the balance. So they will get it trued up, and then you don't have to give any money back if they, in effect, gave you too much. But it is not taxable once you get the money. Let's see here. Okay, let's move over to the actual tax return. There are only 2 returns that you can file now. One is called the regular 1040, and the other one's called 1040 SR for seniors. I don't know the level of the people listening in, but in the past there was also what the IRS tried to put out as a postcard tax return or a short form. That did not go well. That's gone. They've taken that off the table, thankfully. So 2 basic returns. No significant changes in the overall layout of the return, but there are a couple I want to highlight. On the page 1 of the 1040, they have moved the question on virtual currency from Schedule B right up to the front page of the return, right below the address header. That in and of itself is a significant move. The IRS there are more and more people involved in virtual currency, and the IRS is certain that the reporting is not being fully disclosed, and if it is, it's probably not right. So they've put a question right below the address header box called, and here's the question. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? That's simply a yes or no question. Do not skip that question. And believe it or not, the IRS already knows the answer to the question for the specific taxpayers. So what they're looking for is people who are not telling the truth, or they're not disclosing it at all. Don't skip the question. If it's a yes, make sure that what you're reporting can be found on your return, because if you answer yes and then you don't put anything on there, you're going to have another problem. The IRS knows about this in the same fashion they found out about the people that were holding foreign bank accounts and not disclosing that information. In that situation, the IRS went to Switzerland, for instance, and got the banks in that country to disclose American taxpayers that had accounts in their country. And then they matched that up with those taxpayers' tax returns, found out they weren't reporting, and voila, some people either got fined or went to prison. This is the same concept here. The IRS has already gone to an entity called Coinbase and asked Coinbase to disclose all of their clients. And Coinbase, in an effort to comply and stay out of the trouble themselves, gave the IRS this information. So they're asking you a question they already know the answer to. Do not skip that question. The only other change on page 1 of significance is charitable contributions. That used to be a itemized deduction, and many people that used to be able to itemize can no longer do so. They take the standard, and so the IRS has moved up a charitable contribution deduction to page 1 on line 10B, even if you take the standard deduction, and that's a flat rate. So that's 2 changes on page 1. Or the virtual currency question, which is huge in my mind, and then the $300 charitable contribution deduction a little bit farther down, which is not significant in and of itself. On page 2, two things there as well. On line 25, they are now wanting us to break out our withholdings between W-2s, 1099s, and then other. And other would be like K-1s or 1098s or some other miscellaneous tax withholding document. So if the withholdings used to be all lumped together on one line, broken out into actually 3 lines now, 25, A, B, and C. And then on line 30, page 2, that's where the recovery rebate is. And then what they say is line 30, recovery rebate credit, see instructions. The instructions are voluminous. The worksheet is involved. And you need to know, and believe it or not, I've already had a couple of clients say, I didn't get the money. No, they didn't give me any money. And then when I have them go back and check, lo and behold, I got the money. So if you're doing returns for other people, you cannot ask the question enough. You have to be diligent in terms of give them the time frame it should have hit their account. And if you don't think, I mean, if you've got the facts in front of you and you're almost certain they should have gotten the money, they're going to have to do some digging to prove to you otherwise, is really what it amounts to. Because otherwise, the return will get rejected. Couple changes in the pension plan arena. Don't know how many people are looking at that, but required minimum distribution dates have changed from age 70 and a half to age 72. That's a permanent change. Required minimum distributions for the tax year 2020 have been taken off the table. So a lot of people last year that were in an RMD situation elected, my clients elected not to take the money and pay the tax. They just kept it in the account. That's as of right now, that is a one-time event. So RMD waiver for 2020 only, but the RMD age increase to 72 is this point going forward. There is also another change where they're called stretch IRAs, where if you're a non-spousal beneficiary, you could have elected to take an inherited IRA over your remaining life expectancy. Can't do that anymore. It's been moved to 10 years for non-spousal beneficiaries, whole other set of rules. Those are the biggest ones inside the pension plan arena. Let's see here. Yeah, so that, let me delve just a little bit deeper in that one. So anyone turning 70 and a half in 2020 doesn't have to take an RMD in 2020, and they don't have to do anything at all until they are 72. And this is one that, as people tend to work longer for companies, this is a relatively unique one. So if you're still working for a company that has a 401k at age 72, you don't even have to take an RMD until you stop working at that company. That's one that a lot of people don't recognize that's out there. So working for a company that has a 401k, you're contributing, you keep working, no RMDs apply to you until you actually stop service at that company. So that's a good one. Let's jump over to HSAs, one of my favorite tools out there. So who's eligible? What are the contribution levels? So any individual, married, filing, joint, doesn't really matter. Most of what I see, the contribution levels of $3,550 for individuals, $7,100 for families, and then there's a catch-up $1,000 contribution for anybody over the age of 55. You got to be in a high deductible plan, which is a deductible of $1,400 for singles, $2,800 for married filing joints. And why do I like these so much, these HSAs? HSAs actually combine the best features of an IRA and a Roth IRA. So your contributions are deductible before AGI. The earnings accumulate tax deferred, and then they end up becoming tax-free if you pull them out for qualified medical expenses. Thing to note, I get this question occasionally, HSAs are owned by the individual. You can't have a joint account HSA even if you're married to someone. So HSA, each individual person has their own HSA. Spouses, if I had an HSA, I do have an HSA, by the way, so I can use my HSA to pay my own expenses. I can also use it to pay my wife's expenses and vice versa. And then again, the distribution's tax-free for medical expenses. Some of my wealthier clients are, what they're doing is fully funding their HSA, paying their medical expenses, outside the HSA. They're using other after-tax dollars, say out of a savings account, checking account, what have you, and they're just watching that HSA grow tax-deferred until some future point in time. That's actually what I'm trying to do is myself. Again, the IRS is really putting a push on the website tool, Where's My Refund? The reason they're putting a push on it is because there's nobody there to answer the phones. I don't know if any of you have had an opportunity to actually call the IRS. Not a good idea. You're going to be on terminal hold, and you probably will not get a lot of help even once you ever get through. So if you're looking for your refund, Social Security number, filing status, amount of the refund, and you can figure it out. The IRS updates that Where's My Refund website every day. So if you file your return, let's say here in a couple of weeks, got your direct deposit information in there. The IRS, once that return gets in and gets accepted, their website has access to that return within 24 hours. So you're going to get the most up-to-date information utilizing this this website tool, Where's My Refund.
Larry, can I ask?
Sure.
Can I ask a question about HSAs?
Yes.
Do you know if there are different ways to invest those HSA dollars? Like, can we choose how they're invested, or are they just invested based on the company that we have the account with?
Yeah, it's the latter, but I will give you an example. Perhaps I probably shouldn't use the names of the organizations I'm using, so I had my HSA with, let's call it my local bank, and my local bank I was getting 16 cents a month or something like that. I decided and I just did this, by the way, so I decided that I would close that HSA and do a trustee-to-trustee transfer to let's call it brokerage number one. And brokerage number one, now, so I rolled my money over to that account. My future contributions are going to brokerage one, and they're holding my money and paying me more than 16 cents because I have it invested in various mutual funds. So I think that's what you're driving at. So it's pick there are several of them. If you Googled best health savings HSA accounts in 2021, that's where I got my original one from. So I called the list, picked 3, and then found out one I wanted to transfer it to. So I did exactly what you're talking about. Took it away from a bank and moved it to a brokerage. So that, because I want to I'm not using the money to pay any expenses, I'm letting it build up, and I want some growth in there through the market. Does that answer your question?
Yes, and are they still tagged as HSA dollars so that if we want to pull them out, we can still use them for expenses if that's the route we want to use? Or is that like a question for probably?
No, they are tagged as an HSA account. Like my brokerage, I have other accounts there, retirement plan, a brokerage account. I also have an HSA, so it's specifically tagged HSA, and then I control the investments, which are different than my other accounts inside that HSA. So yeah, it is tagged.
Okay, thank you for clarifying.
Okay. Yep, sure. I want to jump over to a couple. The IRS, they publish a thing called the Dirty Dozen list. And the Dirty Dozen list is the 12 items, areas, things that they are most focused on in the coming year as it relates to tax administration from their perspective. This list used to contain, and when I say used to, like over the last, let's just say 5 years ago, it used to have things like abusive conservation easements, abusive captive insurance companies, abusive fair market value numbers of donated automobiles. So they were specific to tax issues that were ripe for abuse. Well, this Dirty Dozen list, when I actually walk through this, these are basically technology type scams that are utilizing tax law. So their focus on this Dirty Dozen list, after I get through it, you'll see that they've changed their approach, mindset, or what they're worried about. So let's get into a couple of those, because I have many clients that are elderly, and those people unfortunately are ripe for some of the things that are on this list, and it causes them a great amount of consternation, if you will, and it's understandable. So let me walk through some of those. Obviously, phishing is the first one. The thing for our listeners and anybody else to be aware of is the IRS is never, and I repeat, never going to initiate contact with a taxpayer either through email or the telephone. It just is not going to happen. So the IRS is already under, well, they're not going to use an email to contact people not only about their tax returns, but about these economic income payments, the EIP and the stimulus payments. So their recommendation is, just like we do here at our office, when you click on something, you better make certain you know what you're clicking on. So that's number one on their dirty dozen list is phishing attempts utilizing the IRS as a hook, if you will. Another thing that they think they're going to see is what's called fake charities. So criminals are going to exploit this current COVID pandemic, set up fake charity, solicit donations from unsuspecting taxpayers, and they're going to name their organization something that's very similar to a current existing legitimate nationally known organization where somebody's going to read it quick, oh, I know what that is, I'm going to send them the money. Or worse, use credit card information to give it to them. So phishing, fake charities. There's another one called vishing with a V, V-I-S-H-I-N-G, which is voice phishing, and that's a telephone call from someone claiming to be from the IRS that says, and they basically, and this is where they tend to threaten the elderly people, that they're going to arrest them, sue them, garnish their wages, garnish their Social Security check. They're going to do something to them unless they pay this bogus tax bill immediately. Unfortunately, I have seen that happen. So they're worried about social media scams. I don't want to touch on that one in a minute too much. Economic income EIPs and refund theft. So one of the things that we saw a lot of is identity theft in terms of these stimulus payments, and then identity theft for, this is a little bit off target, but it's still related, a huge uptick, surge in the number of people filing fraudulent unemployment compensation claims. We've had numerous instances, even in our office, where the business owner who's still running a business, he's still working, still drawing a salary, he filed a claim for unemployment. How is that even possible? He would never do that. So what's happened is many states are being overrun and inundated with false unemployment claims. So that's a significant issue that's out there, and it's going to be for a little while because Indiana and California both took the position that until we can figure out or verify the accuracy of these claims, we're not going to actually take any more new claims. So what you had was people that legitimately had a claim, they really needed the money, and they couldn't file a claim because the criminals had corrupted the system. So that's out there as well. Senior fraud, I think we all know what that is. They're much more likely to be targeted, and again, the threat of doing something to them or taking something away from them over the phone or in the mail even just becomes a very large problem. The next one, we don't see this too much in our area, but more so on the coast, but unscrupulous return preparers. So people should not, and I'm not saying they aren't here in our area, they are, there just aren't as many of them. And if someone asks you to sign a blank return or a blank schedule or something of that nature, you need to run for the hills. So do not sign any blank documents. Make sure that your preparer is listed either on the IRS as having a P10, Preparer Taxpayer Identification Number, or as a CPA or an EA. EA stands for Enrolled Agent. Another area the IRS is concerned with, and we've probably seen these advertisements on TV. They're called OIC mills. OIC is an offer in compromise. So taxpayers owe a bunch of money from prior years. You'll see these television commercials where send us $500 or $1,000, we'll make all your IRS debts go away. No, they won't. That's a scam. They're going to keep your money. They're not going to do anything for you, and the IRS is not going to walk away from that debt. Just to tack onto that, in 2019, the IRS got over 54,000 offer and compromise applications, and they only approved 18,000. So if you think you're going to send in, if it's too good to be true to send in $500 or $1,000 of somebody you see on television, and they're tax lawyers per se, and they're going to make that tax debt go away, it just isn't going to happen. Let's see here. IRS is concerned about a lot of, obviously, identity theft. If you get, for anybody that might be actually doing returns, if you get a reject code that says the taxpayer identification number in the return header must not be the taxpayer identification number of a previously accepted electronic return, you've been a victim of identity theft. The minute that happens, for professional preparers, there's a whole checklist of things that we must do to help the taxpayer notify the IRS, take care of filing a return, protect what, and review their credit reports. So there's a whole laundry list of things we have to do. But if you're a return, or if you're working with somebody and it says, hey, your return's already been filed, that's the first thing that should pop into your mind, is your taxpayer identification number has already been compromised and somebody else has already filed a return, believe it or not, on your behalf to try and snatch refunds from you. Let's see what else I got. So I should have left a few minutes there for questions. So
we do have a question about charitable donations and how to itemize. So if the question is, if the donation is over $300, does that need to be itemized for the total over that $300 amount?
Only if you are of the ability to itemize on your entire return. And for somebody that's married filing joint, you would need $24,000 of those additional charitable contributions, medical expenses, which is probably not going to happen, home mortgage interest, state and local taxes, which are capped at $10,000. It's become a very high hurdle for. We actually did a test here in our office before they moved from to the expanded standard deduction. 46% of our clients itemized. After they moved to the expanded standard deduction, we were down to 15%. So there's many, many more people that don't qualify for itemizing. So in this case, in your example, your 300 would be on page 1, and if they're married filing joint, they'd have to be over 24,000 on all the other stuff. Otherwise, they just leave it off the return. Okay.
Thank you. And another question: if someone took a deduction from an investment account due to the CARES Act, how is that identified on their return? Do they identify it?
Can you do that again? Can you say that again?
Yes. So if there is a reduction or a deduction from an investment account through the CARES Act, is that identified on the return?
Are you talking about, like, for instance, well, the one that I'm familiar with is if you pull money out of a retirement plan and you use that for specific COVID-related financial or physical issues, then that's going to be coded on the actual tax reporting source document, the 1099-R. And that's typically how I would, because otherwise you're going to be stuck. It's easier to identify the income side of what it was used for versus on the deduction side. Does that help you?
I think so, yes. Thank you. Okay. And another question, what's the limit for filing single? Is that, I'm going to ask the clarifying, is that the standard deduction? Donna, go ahead and ask.
Yes, I was just wondering what the limit was for the standard deduction threshold for someone filing single.
Yeah, so that's $12,000. And that kind of dovetails to what we were discussing a little bit earlier, where you had somebody that might have had, say, Social Security, benefits and they had $8,000 of other portfolio income, normally they wouldn't even have to file a return. But these are the people that, if they didn't get any stimulus payments prior or possibly this one coming up, they would want to file a return. They wouldn't be required to, but they should, to get them in the hopper, if you will, to maximize the stimulus payments. But $12,000 is your answer.
Thank you. What other questions do you all have?
Hey, Megan.
Yes.
I have a question. I'm not sure how to type this out, so I'm going to try to say it instead.
Sure.
So for dependent care FSAs, typically there's some pretty stringent rules about the money has to be used in the same tax year, et cetera. But with so many changes happening and fluctuations with care this year, have they modified any of those rules?
Yeah, that's a great question, and it's one that doesn't come up very often, and the answer to that is yes, they have. And what you're referring to is most FSA's flexible spending arrangement accounts have a use it or lose it policy, and what they have done this year because of COVID, they've taken away the lose it portion. So you can use it. If you can't use it all, you're allowed to roll it over this one time. So it's not a forced consumption, if you will. So that's the change that I'm aware of.
Okay, well, can I dig a little deeper in that then? And
Sure.
everybody can learn from my specific situation here. So because I had automatic reimbursements, I actually ended up getting over reimbursed. So can I treat that like a rollover and just contribute less this year?
That's a great question. I don't know the answer to that question. So I guess like any good accountant, I would answer a question with another question. How did you get over reimbursed? I guess because it was automatic and they were asking for your receipts at the end of the year.
Right. So I just fill out one form that says this is my monthly cost. And so, and so I get automatic checks in the mail every month, but then the change happened at the end of the year and I didn't have time to get all that switched. And then I got because the change was actually in December, my daycare was closed an extra week and a half that I wasn't expecting. So I have this couple $100.
Yeah, I don't know the answer to that unequivocally, but my instinct is based on prior history, because you've gotten the money, I doubt they're going to let you roll that up, if you will, into the subsequent period and let you treat that as going forward because you got too much money. I think what they're probably going to say is, and like I said, I don't know the answer to that question, but I'm thinking that's probably a no. In other words, the
So
excess.
it'll just be taxed.
Yes, the excess that you got is going to be taxed in 2020.
Thank you.
Mm-hmm.
Any other questions? This has been very informative, at least for me.
Okay, good. I'm glad.
Not a tax expert by any means. And Larry, would you be okay if we shared your contact information in our chat box for those if they have maybe follow-up questions or maybe looking for an accountant to help them with their taxes? Is that okay with you?
Yeah, that's perfectly fine by all means. And if I forgot who it was that asked me the FSA excess amount, I can actually research that. So if you want to shoot me an email based on my contact information, I will get back to you with the answer for that. Like most good accountants, if we don't know something, we love to go look it up and figure it out for ourselves. So I will jump right on that. But by all means, feel free to share that, and I will respond via email or phone call.
Great. Any last minute questions? Okay. Well, I'm going to put a another little Menti quiz to see if you all had maybe feel a little bit more comfortable or maybe are just a little bit more confused, possibly.
That happens. It happens.
Yes, it's a very complicated, and that's why we are grateful to have accountants who can help us with these issues and help us answer questions. So if you could take a minute to do that, Larry, we appreciate so much your time today answering questions and giving us some updated information on different tax law for this year.
You are more than welcome. Good to see everyone, and everyone stay safe.
Yes, you too.
Thank you.
Thank you.
And well, don't